Hey traders, Akil Stokes here once again with the Triple Threat Trading Live Room Weekend Review. This past week was a very interesting week in Live Room. We started off Tuesday on a positive note with a few winning trades, ending our month in the profit once again, making us 7 for 7 this year, which I'm pretty pumped about, trying to keep that streak alive. But that's about it as far as our highlights go. Between Wednesday and Friday, we were smothered with major news events and conferences which either stalled the market or caused some very impulsive behavior. Now, for those who don't know me, I'm a very patient trader and I'm in no rush to enter a position unless it absolutely meets my rules of engagement. So since Wednesday and Thursday didn't offer me any valid opportunities, I simply sat on the sideline and watched. Yes, this did create some very slow days, and yes, I could have easily found an opportunity to trade, but if there's anything that I learned from my days of being a struggling trader, it's not to force a trade. Yes, you may catch a few good ones now and then, but all that does is build a false sense of confidence, and eventually it'll catch up to you, and it always ends bad. So, even though the ratio room was pretty slow this week, I did have a handful of trades that I posted for syndicate members that actually ended up playing out pretty good this week, so we'll take a look at a couple of those instead. We'll start off on Aussie dollar 4-hour chart, and here's one I called at the beginning of the week, and this was one that I personally didn't want to trade. I personally didn't trade this one because I had another view of the market, but as I mentioned in the video, I still thought it was a very valid opportunity. And what we had here was basically a simple ABCD pattern. A to B, B to C, C to D, completing right up here where the market double topped. Now if we scroll out, you actually see it's more of a 5 drives pattern as well. The market's just been trending, creating equal moves once, twice, 3 times, 4 times, and 5 times for our ABCD pattern. We can also get fancy, bring some Fibonacci extensions in there, get a 127, and what have you. The reason I didn't like it was because of the structural level it was at. We did break and close above this structure level, which allowed me to think that we were going to bounce and basically extend, which is what the market ended up doing, which is why I stayed out of it. But that doesn't mean that there wasn't an opportunity in here. If you look, for those who caught it up at 105.54 after the double top with RSI divergence, you'll see that the market did roll over, hitting our structure point where targets would have been at, assuming you use structure-based targets, getting traders still a good 90 pips in the zone before the market reversed and expanded up. So a pretty cool trading opportunity. Second one that we looked at was dollar CAD. I think I posted this the same day, and if I remove all this stuff, where is it at? Drawing tools. There we go. Remove drawing tools. I'm not going to draw all the Fibonacci's in, but basically the market came down to parity, came into the dollar even handle, which if we zoom out again was right in this structure zone, which I've been talking about for a while, and there's a whole bunch of Fibonacci retracements and extensions in there too. But just like the Aussie dollar, the market put in a double bottom, looking at our first bottom right here, a retracement, then a retest with some RSI divergence, and popped up, getting target ones filled for I think probably 50 something pips. There was also a kiss of death trade in here as well, as you see, based on the news event where the market spiked right back down, halted right at our double top area or double bottom area, and came right back up. So a good 90 pips on Aussie, a good 56 pips on dollar CAD. Another one that we looked at a few weeks ago, which didn't quite hit target profits, but made some pretty good moves, was our dollar yen pair. We had a cipher pattern that we've been watching for seems like a month, and for you guys that traded dollar yen, you know this is a very slow moving pair. But we hit our cipher pattern down here, and basically the market stalled out, giving us a bottom here, retesting, breaking out, retesting, and getting very close to our first target profits. Now, not quite there. I think we came within 20 pips, but still in the mix with this trade. Lastly was a trade that I actually took on my own that I didn't post for syndicate members. So I'm sorry about that, guys. I didn't think it was the best opportunity. And with the syndicate, Jason and I try to post only what we think is the best trading opportunities. But there was one on Euro Yen, which I hope you guys don't get mad at me for this, but it rolled over pretty nicely. Market came down to this structure level. If I draw my red line, and I think there's a, let's see, there's a 707 and a 127. You'll notice that there's always some type of Fibonacci confluence in the majority of my trades, even my structure-based trades. Yes, we have a 707, then check this out. Swing high to swing low and back. Yep, we have a 127 lining up right on that level. The market's also at this previous structure level. What I did was go down to a smaller time frame from the 4 hour to the 1 hour, and just like Aussie dollar, just like dollar CAD, we had the market give us an initial bottom, RSI go oversold, slight retracement off of it, retest that bottom, giving us a double bottom with RSI divergence with Fibonacci confluence, and you can see the market exploded right back up. Now, I didn't catch all of this move. I had target ones around 382, target twos around 618, so ended up getting about 80 pips on target one, about 137 on target two. So what's that? 137 plus 80, so about a 217 pip trade within this move. Then playing a cipher pattern on the way down. Now, our cipher pattern is not faring out too well at the moment. We did not get stopped out. This is one we did take in the live room, so we're still fighting for it, but it's not looking too hot. But again, you never know. We can always roll back down, get out for a graceful exit, or still hit target ones, and that's why it's very important to not get scared out of trades and always put our stops above a structure level, because as you can see, this level held. So that was about it for the week. Again, some really good swing trading calls between Euro Yen, Aussie dollar, and dollar CAD. Again, I apologize, syndicate members, for not posting that Euro Yen on the syndicate, but I did post it on my website. And again, didn't think it was the best trading opportunity in the world. We also had a bat pattern forming down here, so I wasn't sure if this was going to break out and continue with this bat. But it proves that, hey, follow your rules through thick and thin, and even the trades that you think may not be good ones, may not be winners, pay off and give you some pretty good surprises. So that's about it for the week. Lastly, if any of you guys have been to the Forex Market Preview site in a while, you'll see that Jason did a video with a good trading buddy of mine, Rick Galloway. And if I bring this, bring my web page over here, his site is www.protradernetwork.com. If I can type right. And what he's doing is he's doing a workshop next week, I believe August 7th and August 8th. Basically an introductory workshop for new traders. Just talking about the very, very basics of trading, the very, very basics of, I believe, using a platform. So it's something that if you're new to the game and you want to know what is a spread, what's a pip, what's a tick, stuff like that, you're definitely going to want to check out this workshop. And if you haven't been to this Pro Trader Network site, it's a great site for newer traders. Rick posts some really good stuff. So check that out, watch the video, and I will see you guys next week. Take care, traders.